MSCI stock is a buy right now, and the thesis is just getting better and better. And today, as I'm recording this video, the thesis just improved once again. So what will we do in this video? In this video, I want to talk about MSCI. I want to talk about some comments from the CEO from the latest earnings report. And I want to talk about the new debt that the company just got. As I'm recording this video, it was like a few minutes ago, like 20 minutes ago, this news came and the company is issuing more debt to do more buybacks. So you will have a lot of value, and actually in pre-market the stock is dropping a little bit. I think I will buy more MSCI. It's actually 8% of my portfolio. Very happy with the holding right now. In any weakness, any weakness, I will buy more. Okay, so it will be a pretty interesting video for you because I will cross-read different elements, because I think MSCI is transforming from a good business to a great business. They want to focus on efficiency, on buybacks, on earnings per share. It will be lovely for us investors. Okay, I think we can start. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, investing in quality companies available at a fair price. And I think right now, MSCI is a great company, a great quality company available at a good price, at a fair price. This is why I say MSCI is a buy right now, okay? You don't have a lot of buy opportunities in this expensive market. I think MSCI is in this situation. So, I want to start showing you this piece of news from Seeking Alpha, very new, released today. MSCI prices $500 million notes offering. Yesterday, you had this new information, this article, saying MSCI wants to do more debt. Before that, maybe I can start talking about the earnings call. MSCI reported earnings a few days ago, and the stock went up 8% in one day, something like this. I made a video of 3 hours, the most detailed video you can have on MSCI. I think that's the only video you need to understand MSCI. And during the call, the CEO said that they thought the stock was extremely undervalued. The CEO is buying shares for his own family, and they are very happy with doing buybacks right now. So they just recently, like 1 month ago, they took $1 billion of debt. And this quarter, 2 days ago, they announced they made a buyback program of $1 billion. They already used all the debt to do buybacks. It shows conviction. They are doing massive buybacks. And during the call, they said that they increased the leverage, but they had plans in the future to continue to take on more debt, to do more buybacks, because I think they are extremely undervalued right now. Well, 2 days after this report, 2 days after the stock went up 8% in one day, they announced this. MSCI launches senior unsecured note offering, and it doesn't take a lot of time for the public to know what is happening. You wait 24 hours, 48 hours, and you have this new article. MSCI has $500 million more debt, and the goal of this debt, new debt, net proceeds are intended to be used for general corporate purposes. Look at this, including buybacks, share repurchases, investments, and acquisitions. My guess is 100% of the debt will be used to do buybacks. I'm pretty confident that this is exactly what they will do. So now today, a couple of minutes ago, this was new. You have an offering of 500 million aggregate principal amount for 5% due in 2036. In 11 years. So you don't care if you have a 5% interest yield on your debt. You don't have to pay it now. We will live in a world with inflation. So we don't care about 5% interest on your debt, right? If inflation is 3, 4, 5%, the absolute term, the absolute numbers of the debt will be much cheaper in the future. So this is very smart. They do exactly like Warren Buffett and Berkshire Hathaway. You issue debt leverage for many years in the future, for 11 years. So you want this to be as far as possible, and you want this to be as high as possible. Okay, so yes, you will have to start paying interest in March 2026, semi-annually, and very, very well. Okay, you have 0 comments on this. Nobody on Twitter is talking about this. Guess I'm the only one in this MSCI niche. Fair enough. Okay, so you have new debt that will be used for buybacks. And if you look at the report, the latest report for MSCI, you can go to the report here, scroll down to the balance sheet. Where is it? Head count, no. I want to see the balance sheet for, this is the segments. Cash balance and outstanding debt. Okay, the total amount of debt was $5 billion. We have $400 million of cash, and the total debt to adjusted EBITDA ratio was 3. MSCI seeks to maintain total debt to adjusted EBITDA in the target range of 3 to 3.5. So 2 days ago, during the time of this report, you are on the low end of your target. A couple of months ago, this ratio was below 3. So I said on videos, I mean, you can check a couple of months ago, MSCI will take on more debt. It's 100% guaranteed you will have more debt. Guess what? A few months ago, they issued $1 billion more debt to do 100% more buybacks. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Okay, in the earnings call, you had a comment from Henry Fernandez, the CEO, about his leverage position. It's at the end of the report, and he talks about the buyback program. Because during this earnings report, they did $1 billion of buybacks, and they just announced a new buyback program of $3 billion. So there was a question from an analyst on Wall Street saying, how will you finance the $3 billion in buybacks? Will you use your free cash flow, or will you take more debt? So yes, they are saying they are an undervalued franchise, undervaluation. They are very conscious and disciplined about buybacks, but they think they are pretty cheap right now. We would like to be as aggressive as we can, as long as you have undervaluation in the franchise, and we want to take advantage of that. We are strong believer in the medium and long term of the company. The CEO has bought personally $20 million worth of shares for him and his family. And in terms of the split between free cash flow and debt, in order to do the $3 billion over some reasonable period, we'll have to do both free cash flows and continue to lever up to 3.5 times or close to 3.5 times. So literally, the CEO told us investors that they are going to continue the leverage from this ratio of 3 to 3.5. We knew it was going to happen. Well, 2 days later, they just announced a new debt level. It shows execution, stewardship, and conviction, because they really think the stock is cheap. It's not fake. They are literally doing what they say they would do. This is lovely to see. When you have companies like Evolution AB with vague management teams, vague reports, vague replies, you don't know how they will execute. MSCI is the definition of execution. So I wanted to start this video by saying, yes, they want to do more buybacks. They still think the stock is cheap. They are doing buybacks. They are not waiting. At current prices, the management thinks that the stock is very cheap right now. It shows a lot of conviction. Fun fact for you guys, every time the CEO bought, it was the local bottom for the company. He bought in April 2024 here for his family, like his own personal money, and it was the local bottom. And also the CEO bought here at the beginning of 2025 with a bad second quarter. Bim, it was the local bottom. And now they are ramping up buybacks, which shows a lot of efficiency. Second point I want to mention in this video is the way they will implement AI, because now there is a threat that AI will disrupt MSCI. AI will eat software companies like Adobe, for example, or S&P Global or MSCI. Well, S&P Global just reported earnings and the results are fine. I believe S&P Global and MSCI will implement AI everywhere to not hire anymore. If you look at the report from MSCI, you will see that they are not hiring anymore. The headcount is just up 2% year on year. In the past, they were hiring 5 or 6% more employees every year. Now they are no longer hiring. All the revenue increase is going down to the bottom line. So because you don't hire humans, you just implement AI, your margins are going to go up. And this is exactly what the CEO is talking about. You have clear paragraphs here about AI from Henry Fernandez. This is the first time this earnings call, this is the first time I've seen the CEO so bullish about something, so aggressive about buybacks and about AI. This is the most bullish earnings call I've listened to when it comes to MSCI. That tells you a lot. Normally, they are pretty rational and honest, so they have a track record of saying the truth. And now they're saying AI will really improve the company, accelerate the margin expansion, and improve the overall business of MSCI. If the track record is real, this is the truth. And if this is the truth, MSCI is really undervalued at the moment. MSCI has the potential right now to generate 15% per year, 20% per year, because the management, I've never seen the management so bullish actually. This is very good for shareholders. Okay, so this is the first time they talk about AI. In the past, we hadn't really talked a lot about AI because our style at MSCI is not to talk about intentions, but to talk about actions and real tangible things. And you have a couple of paragraphs where the CEO talks about how they are implementing AI. If you are too busy to read, they will reduce costs with AI. I first mentioned the lack of employees. You don't have human capital. You will implement chatbots, agents, algorithms. First of all, that's not a lot of cost. Okay, so fewer employees, but the same amount of revenue or higher revenue. So less cost. Additionally, second point, you will have the possibility with AI to create much more custom indexes, to create new products at a faster pace. So more revenue growth and at the same time, better margins because you are cost efficient. And you have a few sentences that I want to highlight in this video. Meaning, the punchline is AI is a godsend to us. Let me repeat that. AI is a godsend to us because what MSCI is a company that collects large amounts of data, proprietary, unique data. AI is going to help us scale up dramatically 1,000 times more than the next 5-7 years in data sets. Clear euphoric behavior from the CEO. And I'm telling you, this is the first time I've seen such an aggressive comment from the CEO. If the track record from Mr. Fernandez is right, maybe MSCI is the best opportunity when it comes to AI, because he comes to explain that they will benefit from AI without having any cost. MSCI doesn't build data centers. MSCI doesn't have any capex. MSCI doesn't have any cost. You have gross margins of more than 80%. Right now, margins are improving. They are focused on improving the margins for the next future years. So the gross margins will get 1% better every year. Maybe 1% better, maybe 2% better. But what is 100% sure is the whole efficiency of MSCI will improve. And there is a clear difference between MSCI and S&P Global. Because S&P Global is doing acquisitions. They are acquiring other companies in the analytics segment. MSCI is no longer doing this. no acquisitions, only buybacks. All the cash is used to do buybacks. So MSCI is about efficiency, buybacks, free cash flow per share, earnings per share, and this is exactly what you want for long-term investing. You want this level of quality focus from the management team. Secondly, yes, okay, very well. All the employees are using AI 100% every day. We have AI to build products. We will build more products, more services using AI. We are already building new things with AI. And if we apply AI dramatically and we can lower our operating run, the business expenses by 5%, 10%, 15%, all of that money can go into investing into the change in the business. And that will create an incredible upsurge in new product development for us. That's a goal we have for next year, for 2026. So next year, this is very likely MSCI reaccelerates from a revenue growth rate of 10, 11% to more than this. And if you grow your revenue by 12%, you improve your margins by 1 or 2%, you increase your net income. The net income will grow at 16%? What if they do 2% buybacks, 3% buybacks? You can grow from 12% revenue growth rate to almost 20% earnings per share growth. So MSCI is in a clear position to grow earnings per share 15-20% per year for next year, but also for the year after this, 2027, 2028. And if everything accelerates, the EBITDA will go up. And if the EBITDA will go up, the debt ratio will decrease. If, look at this, the total debt to adjusted EBITDA. If AI helps them achieve better EBITDA, their leverage ratio will go down. So they will be able to take on more debt, to do more buybacks. So you have the best of both worlds. An efficiency system that will benefit from AI and a clean balance sheet that wants to focus on buybacks because they think they are undervalued. And the management is executing very fast. And now the stock is not so expensive. If you look at the valuation for MSCI, you can look at the financial tab on Fiscal AI. By the way, if you want to use Fiscal AI, access the earnings calls, the reports, the slides, the financials, the custom metrics, use my link in the description. It will get cheaper. You have a discount code in my description to use Fiscal AI. It's one of the best websites you can have actually. And okay, forward price to free cash flow. This is what you have for MSCI. This is a premium business model. Recurring revenue, high margins, huge moat. What is the good valuation for this business model? You can argue MSCI deserves a premium valuation because it's a premium business, right? Add to this a premium quality of the management team, honest insider ownership. The CEO owns 3% of the shares. He has been here for more than 20 years. He knows exactly what everything is doing. The CEO is buying the dip. You have plenty of good green flags for MSCI. So the question is, what is a good valuation for this business? If you look at the forward price to free cash flow, we are at 27 right now. Before the earnings, the stock was having a forward price to free cash flow of 25. I was buying here at the price to free cash flow forward between 25, 26, 27. If you look at the 10-year average, we are at 31, 32. The median is 31. There is a scenario where the market reacts positively to MSCI because in a couple of quarters, they will grow revenue again, like nicely if you have a reacceleration. And I wouldn't be surprised if the forward price to free cash flow would be up to 35. 30 would be good, 35 would be even better. But I think because of the quality of the business model, the quality of the focus and the efficiency, you can have a big re-rating for this business model. And now we are at the lowest valuation we've seen in 5 years, 6 years. So MSCI is not expensive at all. If you are conservative, you can say MSCI is fairly valued. Well, you have the opportunity to buy an exemplary business, a wonderful quality business at a fair price. This is a golden scenario I see right now. Let's see if this video ages well, but I'm very confident and I am buying more, and this is part of my portfolio. So obviously I'm biased. Do your own due diligence. But yeah, I wanted to update you on the situation with MSCI. Things are just getting better, and I think MSCI is a buy right now. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.